Good morning, everybody. Welcome to Trade Live with IG. I'm Paul Cooper, broadcasting live from Valencia, and I'm joined today by the legend in his own lunchtime, Mr. Rich McDonald. Rich, how you doing this morning?
Mr. Maturin, sir, it's very much a pleasure for me to be here today with you. Thank you for welcoming me onto the show, and I hope you're well.
Very well, thank you. Very well. What you got planned for this weekend?
Well, we've got every year we have an Irish group Christmas lunch. So this started, I think, about 15 years ago, and it was literally just all the Irish people in the city. Then they started branching out and they let these Scottish renegades in, and it's grown and grown. And there must be about, I would say, 80 of us. So we take over a restaurant in Fulham. And it's all prepaid. There's, you know, all the drinks they're sorted, nice bottles of wine. And yeah, just have a really good catch up. But they also have live music. And then some of the people also start singing all the Irish music as well. So
you got to love the crack. Absolutely.
There will be a lot of crack this afternoon. And it's my Cheltenham crew, the guys that I go horse racing with. And then, yeah, all the Irish in the city. So, but there is one guy that comes every year, and I always get sat next to him, and he's the guy that beat me to my first ever chance of a job at a hedge fund. It came down to the two of us. We were both interviewing at UBS O'Connor, and you know, we hadn't met before, but you know, we knew of each other, and he got the job ahead of me. So every year, it just reminds me, it slaps me in the face.
But you're not bitter and twisted?
Not at all. You know, Podrick, big shout out to you. Look forward to seeing you this afternoon. So what have we got on the cards today then, Paul?
Well, I think you're maxing me out today, to be honest. The drugs have yet to kick in. I've got, in case I need a sugar rush, I've got the oldie alternative to a Mars bar, just in case.
And what is that?
But, sorry?
What's that?
It's called a race.
Ah.
Yeah. So I know you love your Mars bars, but this was, these are about 35 cents in oldie.
Fantastic.
Over here, not the £6 that you pay in
W.H. Smith.
W.H. Smith's. So yeah.
So yeah.
So yeah, I'm basically I've got the show. I think
you've got the whole show
coming up and down. So.
And to be honest, you know, we might just put you on with Bill Blaine as well.
Right.
I hope you don't have any plans for the morning.
Look forward to it. Have an easy day, Rich.
It is, but yeah, apart from that, so that's my afternoon this afternoon. So that goes straight into, I don't know, do you get Traitors, Celebrity Traitors television program across in Spain?
I can get it through VPN, but not a fan, I must say.
Right. Well, they do a live experience here in London. And so it's my good friend Matt Carter's birthday today. Happy birthday, Matt. And his wife, Chessie, has organised for 10 of us to go along and experience this Traitors game this evening. So that's after an afternoon of drinking with the Irish. It's going to be quite a day.
Look forward to it, I'm sure.
And at some point...
We need photos.
Well, yeah, we'll do a live Discord, shall we? At some point, we've got to fit inflation data in as well into that. So shall we have a look at overnight action there, sir?
Absolutely, absolutely.
Now we're getting close to now. Is it Feliz Navidad? Is that right across there?
Yeah, well, yeah, absolutely. In fact, this weekend is a national holiday. We've actually got the festival of the Immaculate Conception on Monday, very religious holiday, and tomorrow is also the Constitution Day here in Spain, which is where they're celebrating the new constitution coming away from the Franco era.
Okay.
So yeah, it's a big weekend. all the hotels are booked up, etc. So yeah.
Well, we decided to try and make the studio a little bit more Christmassy, just in I'm not sure about Immaculate Conception, but if we can see, there we go, look at that. And you see that my other chair is empty. That's because poor Angelina is not feeling well this morning. So I'm sure you'll join me, Paul, in sending out the best to Ange in her sick bed.
Yeah, I had a bit of a chat with her yesterday afternoon, actually, so I know that she wasn't feeling particularly well. So yeah,
what was
absolutely.
that? No,
Good
Paul,
luck, Ange.
it's not a hangover, Paul. It is not. You can't say things like that. I can't believe you insinuated such things.
Okay, shall we talk about trading? Shall we get some
Let's do it.
News out?
Shall we start with those jobs numbers from yesterday?
Yeah.
So, what did you think of the jobless claims when they came through there?
Well, I think it was clearly a bit of a surprise. The actual numbers, I think, were expected to be a little bit lower, weren't they?
Absolutely, yeah. 220 was the expectation, and 191,000. So that's jobless claims. So better than expected. And yeah, really, you know, that goes against all the rhetoric. It goes against all this thinking of, you know, that the US is in a slowdown. So I don't remember seeing a number under 200 for a long time. So obviously the chances of that rate cut in December slightly paired. We can go on to our FedWatch tool there and check out the latest probabilities are still 87%. So just a small drop back there, you know, initial weekly jobless claims that don't move the needle that much, but it was an interesting sight. Didn't stop the market looking decent there this morning, isn't it?
Yeah, I mean, just going back to those numbers, do we think that all the jobless that came through from Doge earlier this year are now featured within all those numbers?
Yeah, I think, and then obviously you've also got the complications of the problem of the shutdown, and all those coming back to work from the shutdown. You know, that's complicated in those set of numbers as well. So it's still messy data, and that's why the rate cut expectations aren't taking that much notice of it, I think. If that fed through into the non-farms, then it would be a different story. If non-farms were suddenly 150,000 positive, then you know, I think we might get that December cut, but then the subsequent ones after that would start to look less likely.
Yeah.
So yeah, futures this morning then, Paul. We've if we can get those up, we'll see that the S&P called up 27 basis points, NASDAQ up 40. So what's your positioning like at the moment?
Still overall bullish. I've had a very good week trade-wise.
Nice.
I think overall there's been some very big movers. I had a position in US rare earth, and yesterday that was up by nearly 25%. So that was a big kicker.
And how did you come up with that one?
Overall, it's been pretty good.
Yeah, where did you get the idea of that one?
Well, I've been following rare earth minerals for quite some time, and I think overall the market around that is looking extremely good. There's one particular one which came up yesterday, or rather overnight, that I'm sort of really quite interested in, which is a company called Neocorp Developments. And that was up 14% yesterday, and it's a scandium miner.
Okay.
Which I hadn't really heard of until a couple of weeks ago. And this is a mineral which is the 50th most common element in the world, but it's extremely difficult to mine. And it's used in aerospace, sporting goods, lighting technology, solid oxide fuel cells, so it's in the sort of clean
The clean
energy
energy, yeah.
sector as well. So it sort of popped up on my radar when I saw that the price was reversing. You can see the 5 green bars coming up there, and I sort of popped in on the 3rd bar. So that was something that's really gone well.
Yeah, this little move in the last 48 hours, that is beautiful, isn't it?
It is. It is.
Look at that on the oof, yeah. And so you're already in this name?
I'm already in this one, yeah.
Where did you get in?
I got in just on the 3rd reversal bar. So you're on a 30-minute chart here. I was actually in a couple of days ago. So
Right.
if you go back to the daily chart or a 4-hourly chart.
Yeah, let's do 4 hours.
Yeah, if you go back.
There we go.
So I'm roughly around about the 560.
Oh, fantastic.
Yeah.
Well traded. So I mean, yesterday must have just been that you know, that's what you were playing for, really, wasn't it?
Exactly. Now it sort of popped up on my reversals divergence strategy. Now I love divergence. I think it is an extremely good way to increase the odds in terms of predicting which way a stock is actually going to be going, and it's probably the main strategy that I use. And it sort of popped up on that on the 4-hourly chart, and my rules state basically get in straight away and leave it. And quite often you get these big pushes up or down if you're going short, quite often gapping. So you know they don't turn out they don't give me losses all that often, to be honest.
And can you just take us,
a very good strategy.
For those that maybe aren't on the Discord or haven't heard of the divergence strategy before, what is it what's the setup that you're looking for?
So it's a trend-based strategy. So everything that I do is actually trend-based, and what I'm looking for is basically where the price action is diverging from an oscillator. Now, the oscillator that I tend to use the most is the RSI for this particular strategy. So if the price is going up, for instance, and the oscillator is coming down, that is the sort of divergence that will be called out. And there's 4 different types of divergence. There's standard divergence, both up and down, so long and short, but there is also hidden divergence. And I tend to get the best results with the hidden divergence, which is where you'll take the measurements under the line of the oscillator. I've actually got the strategy on the Discord group in full, so people can actually follow it.
Brilliant.
And I'm sort of planning on doing a video of going through the whole scanning selection process so that people can see how that works. Yeah,
that would be fantastic. And then you'll post that on the Discord?
Yeah. It's all posted on. We have a channel called Trading Strategies, and this one is there in full. So yeah.
And I think producer Phil's just about to pop up your name that people have to add to get the invite.
Okay.
How many numbers are we at the moment?
As of this morning, it was 127. So we've got probably about 20 or 30 people who are active on the group at any time. They contribute considerably. We've got some fantastic traders on there who are very willing to share their ideas.
Yeah.
And I think particularly over the last 3 or 4 weeks, the quality of the trade suggestions has actually gone through the roof. We've had some really, really good suggestions coming through.
That's right.
And yesterday, I think we might have actually moved the market a bit on one particular item. There was one of the most prolific contributors, a guy called Steve, posted an idea of MedPal AI, which is a UK company, very small cap, 26 million.
Right.
And he put it forward as a suggestion. And at first I thought, yeah, too small. But then I do have in my sort of one of my investment accounts a little bit of a fund which I use for very highly speculative ventures. The last time I used this was with Smarter Web Company, and obviously that went through the roof. This one, I think a number of us decided to take a little bit of a punt on it with a small investments, and yesterday it went up 16%. So I think that just shows you, whether it's us that are actually moving the market or not, I don't know, but certainly I think we helped it go upwards.
And was it from a technical point of view, or was it from sort of fundamentals that you guys were looking at that name?
Well, it's certainly a company of the moment, I think, Rich, in so much as it's in the medical AI space. Its main area, I think, is that it really wants to become the Amazon of the pharmaceutical world. But it also uses AI for diagnostics, patient diagnostics, etc. So therefore, when you start thinking about the NHS and its need to save money and to gain efficiencies throughout, this I think is one company that could actually make an awful lot out of that and contribute to the recovery of the NHS, basically.
Oh, fantastic.
And it was on that thinking that I think the majority of us decided to have a little go at it.
And it's interesting because if we can see the chart here, there's clearly been a seller, right, for the past about 6 weeks. And so, you might just have been the soaking up the end of that seller. Today's going to be big.
There is a trend line on my own chart. There is a trend line which it has yet to break. So it is still going downwards, but I think the news that's been coming out over the past couple of days, I think, really makes this something which is actually quite attractive. And with that in mind, I think we've got to thank Steve for bringing this to our attention. I mean, I think most of us have only put a little bit into this, but I've probably already made enough money for a family bucket of KFC. So it's
or a real
it's got a bit
bar.
to go before. yeah, it's got a bit to go before it matches Smarter Web Company.
Yeah,
but you never know.
Just so having a look at the trading update there. Always, as we like to do, always the big risk warning on something as small cap, and also it's a wide spread. You're already paying a couple of percent in the spread there. So, certainly adhere to those risk warnings when you are looking at opportunities like this.
Well, I mean, in this particular instance, I've put in a couple £100. It's basically a shrug of the shoulder type trade. If it goes, it goes. It's certainly wouldn't be banking the house on this, but it's one of these trades where I think it brings a bit of fun to your life, as long as you treat it as a high risk entry. Then fine.
Yeah.
Kiss the money goodbye. If it comes back in multiples, fantastic news.
And you've helped the NHS.
But it's no different than going down the bookies or going to Cheltenham and saying, right, here I am, this money's gone.
Yeah.
I might as well have fun with it.
Now, talking about money going, what do you think of this Trustpilot news? Julian's asking. This is really interesting if it's true.
Well, do we know who is shorting it?
Yeah, there was a claim yesterday by a short selling firm. So here's our story here. And it's what the allegations are if they're true, like I say, so Grizzly Research says that the FTSE 250 company coerces businesses into signing up for membership by creating unsolicited review profiles and leaving negative reviews. So then the companies have to come on and sign up and pay to then, comment on those reviews and say, look, these are fake, this didn't happen. It would be a fairly aggressive business strategy.
Well, it would probably be illegal, wouldn't it?
Oh, absolutely.
I mean, we're talking here probably slander, libel, I guess, more than anything. So and there was a little bit of discussion on it before I came on this morning. I mean, it's gone down now nearly 32%. So if this proves false, then I think the bounce would be a fantastic opportunity to get in. Where you'd get in, I don't know. It would. I'd certainly need to be on price action in terms of seeing some reversal bars coming through. But if it's proved to be true, then probably it's got a long way to fall.
Well, so Trustpilot did come out with a statement several hours later, of course, dismissing the claims, saying they are selective, misleading, and framed to support a predetermined narrative. The report completely admits key context and publicly available facts, creating a false impression, and exhibits a lack of understanding on how Trustpilot works.
Yeah. Well, part of you would say they would say that anyway, wouldn't they? I mean, they're not going to come out at the moment and totally sort of go, yes, this is true. So only time will tell, as Phil says.
Indeed. Good morning, Poppy. I see you on the chat there. He's been up early this morning reviewing our edit of The Art of Investing yesterday. Wonderful show we had yesterday. Really nice chat, just the three of us. And that'll be coming out on your screens about 4 p.m. this afternoon. But he says, yeah, Grizzly Research, that sounds like Rich's company. Me being the grizzly bear that I am, not at the moment, net long for the first time in a long time. And we're starting to see Oracle move, Paul. We're starting to see that surge into numbers.
Well, it's still a very good company, as Pierce says, so I think the recovery is obviously going to be on the cards, I would have thought. I'm waiting for a good entry point. I'm not in it yet, but it's certainly one that I'm watching quite closely.
So numbers next week, they're really going to have to come out and I assume they're going to address the debt concerns, right?
Yeah.
There was a story around last week that they were doing a deal with a number of banks into another 38 billion loan. But whether that helps, to kind of shore things up and maybe it's a long-term facility and they'll have to put some meat on the bones of these debt plans. And if the numbers are good alongside that, then, that's where we get our move higher. But the banks that are short going into it, I would be quite nervous being short of this thing.
Well, I think there's clearly been some damage there. I've seen that that Citicorp have reduced its price target for Oracle down to 375, which is still a leap from where it is at the moment.
Did that come out yesterday?
Yeah, it came out this morning, I think, or overnight.
Oh, that is very welcome. That would make sense why we saw such strength. And yeah, you're right. At 9 p.m. last night, they were trading 214, and they're a further 2% higher. So this will be an interesting one, but it's been tough. There you go. The Citi Citi are on a buy with a 375 target. Deutsche Bank have got exactly the same target. Jefferies are at 400, and TD Cowen at 400 as well. So You know, that's going to be the highlight of my week next week, along with the Fed decision, of course.
Well, 375 as a price target is still quite attractive. That's 75% on where it is at the moment.
Exactly.
So you know, it's worth a punt.
Right, but you know, many risks there as well, and yeah, we can understand why it's gone down so much on this. You know, the concerns around the debt, but yeah, let's see how that does next week. Maturin, our supreme leader of the Discord, I see it says there. Do you want to call the break?
Shall we have a break?
We're on a break.
I might have my Mars bar.
Good stuff. Everyone, we'll see you in 2 minutes when we'll find out whether Maturin has a bell to ring in his luxury apartment in Alicante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
Right, welcome back, everybody. We're almost there to the opening bell, 9 a.m. across in Spain, 8 a.m. here. We just got a little bit of upgrades, downgrades. Well, Relics announcing a £250 million share buyback program. That's one I started to look at yesterday. And then we've got, not too many upgrades, downgrades, actually. So Alstom. the only one. Right, do you want to count us down, Paul?
Right, okay. Well, it's time to ring the bell, isn't it? Absolutely.
There we go. Let's see what is moving and shaking this morning. Right, take us through it there, Maturin.
Well, we've obviously got some bad news with rank. One of the defence stocks, Severn Trent, obviously losing a bit of pace there. Looking down the list, BP suffering 3% down. That's pretty brutal, I guess.
I hadn't seen anything there actually.
No.
Yeah, JP Morgan have cut Total to neutral, but I wonder if there's something out on BP as well, because that is an aggressive move for a Friday, isn't it?
Yeah.
Yeah.
I think also with regards to the ones that are going down, I mean, Airtel Africa, which you haven't got listed there, is also down 1%, which is one that's been doing extremely well recently. But going up.
Yeah, there we go. Anglo-American, £30 for the first time in a long time. We've got, up 1.7% there. That is helping the other miners as well. Glencore, Antofagasta. Very happy to say I'm in the BlackRock World Mining Trust, as we are in the Art of Investing. We got a decent sized position in it there. I'm also in it PA after we bought it with Garth McKenzie on Monday.
And BHP up 1.8 as well. I'm seeing on my screen. Also an interesting one is Rightmove, nearly 2%. I know you haven't got it there. I've got it from the full FTSE main list. But that's looking quite interesting. Rightmove, particularly on the back of what was happening from the budget with regards to house sales, etc.
Yeah, I haven't looked at the Foxtons share price for a while, but I'm guessing they weren't doing that well. Tesco £4.50 now. That has been an incredible move in the past 12 months. I remember them trading at £3.10.
Yeah, they're doing really well, aren't they?
Go on,
just
sir.
A bit down the list. I mean, I'm seeing a little bit of a bounce from 3i Group. Now they took a huge hit about 10 days ago, I think. Dropped really significantly. Whether it's bottomed out yet, I think time will tell. But it seems to be having a bit of a bounce at the moment.
Then you see down there towards the middle of the page now, Relics. Relics, one I mentioned on Discord yesterday. I was at a function on Wednesday evening speaking with about crypto ETNs and then also the outlook for next year. Chris Beecham gave a wonderful presentation. But also in one of the panels was a lady from Cazenove, and she was highlighting Relics as one of her favorite choices for 2026. Relics, of course, has been smashed in the past 12 months. Because of fears around how much they'll be disrupted from AI. Look at that, down from £41 down to where we are at the moment, just over 30. And that's since May of this year. So Relics really, a tricky year, but this lady from investment manager at Cazenove, that's her one to highlight for 2026. So I did add some to my ISA yesterday, actually.
Right. Okay. Good. I mean, I'm seeing that hopefully that bottom there of 29.76 is going to be a firm line of support now as it sort of moves forward. But that said, all the moving averages, particularly on the daily, are still showing downwards. So it's going to have a bit of a task to get up. That said, on the monthly chart, the moving averages are all in line. So it's still trending upwards. You've got to say that perhaps this is just a bump in the road for them.
I would certainly hope so. It's been an amazing performer. Another amazing performer today, and thank you very much, Supersonic. Look at Greg's go. Maturin, I bet you don't have a Greg's across in Alicante.
You're damn tooting we don't.
An upgrade from JP Morgan. Stock up 7%. That is back to, almost at £17 here.
Wow. Wow. Is that Chris Beecham buying sausage rolls?
I doubt it very much. He's a Marks and Spencer's man, absolutely. Right, what have we got in Europe then? Stellantis have had a great few days. We'll come to Trustpilot as well in a second, but Stellantis now over €10. I'm very relieved that I closed the short there. What else, Maturin, are you seeing in Europe there?
Well, I like Airbus. I think Airbus is one that I've been following over here in. Obviously, I trade European stocks as well. I look after my partner's portfolio, and so I am keen on looking at those sort of companies that I can get really at a premium through her own broker. And Airbus is one that I think is one that has got quite some future. It recently had a bit of a shoot up with some more orders for its stuff from I think it was from Q8.
Yeah.
So I think that is one certainly to watch and possibly for a long-term hold for a portfolio.
Well, here we go. Looking at, let's do a 3-year chart there. Oh, beautiful, hasn't it? That's really done well.
Yeah.
Just a tricky last couple of weeks.
Well, I think, yeah. I mean, I think with my partner's money, we got in, I think, just before that gap up. So that was a few months ago. It's sort of come back down, but surely the outlook, I think, is pretty good for this company. Obviously, they're in competition with the likes of Boeing, and Boeing has recently been doing extremely well. It has had some really big orders from the Middle East recently. So I think there's a lot going on in sort of the aircraft manufacturers world.
Right, Trustpilot, you called it there, Maturin, up 8%, a little bit of relief there. Let's just look at how it traded into the close yesterday. Yes, so I would imagine the statement was probably released somewhere around that 2:30 time. And it got to this level, but then sold off again into the close. And you're seeing back towards that 141. So interesting. I must admit, I've never traded this in my life.
Me neither.
I'm not about to change that in a hurry, considering what's going on in the stock. That's tricky, isn't it?
Well, I think it's in a bit of a flux, isn't it, at the moment? And probably the smart money is to sit on the sides and have a look for somewhere else to put your money, I think.
Yeah, I think so. Right, what about the losers in Europe then? Let's go to there. Again, the oil stocks. So Supersonic also helping us there with BP. BP downgraded by Bank of America and Shell as well. But yeah, the whole space weak this morning.
Yeah. Rheinmetall not doing so well of late either, I think. It's come off its highs, I think, with the certainly since the discussions around the Ukraine and the various peace deals, I think it's sort of well off. In fact, we're now at new lower lows. It's come back up a little bit, but it's still not really making it attractive for me to get back in. It was one that I traded really well earlier this year. I think particularly when we were discussing on IG the defense ETFs.
Yeah.
So things like NATO and there was the new one that came out,
the Wisdom Tree
Quad,
European,
etc.
Yeah.
Yeah, and obviously Rheinmetall features quite heavily in quite a few of those. But since those talks, it's certainly taken a bit of a nosedive.
Yeah, and I mean, I think it was the absolute perfect scenario for them. Germany was being bought, defense names were being bought, and money was flowing out of the US as well. And it became one of those stocks that was, you know, I mean, we used to look at it every morning, right? It was up 3 to 4% every single morning. So a little bit of consolidation, probably quite healthy.
Yeah. Yeah. Well, it gives us opportunities, doesn't it? So I think it's one to sort of keep on the watch list.
Exactly. So luxury sector, we are seeing UBS, JP Morgan and HSBC all projecting 5% organic sales growth in European luxury as Chinese demand recovers. Richemont are their top pick, but that is seeing, let me see here. Yeah, we're not actually seeing them respond that well. Louis Vuitton down 90 basis points this morning. And then Kering as well, Gucci 294. You know, I've seen it trade with starting with a 3 so many times in the last few weeks. It's interesting to see it back below there.
Yeah. There's one European stock that I'm following quite closely. I do have a position on, which is Commerzbank in Germany, which has recently sort of broke above lines of resistance, and I think this, along with other banks as well, obviously within the European zone, are doing really quite well. Similar to the UK, obviously we got Barclays doing extremely well over there. I think Commerzbank is particularly interesting. Here in Spain, we have a bank called BBVA, which is, I think, the largest or one of the largest companies on the IBEX 35. And that's really quite an easy one to trade because it's been in talks with another big bank called Sabadell. Those have fallen through, and I think it's probably ripe for another discussion about joining up, because there's too many banks here in Spain, basically, at the moment.
I think
interestingly, I know you like your shopping. The largest company in the IBEX 35 is
Zara,
actually the company that owns Zara.
Yeah, it's one of my favorites, that one.
Yeah,
that was one of the first stocks that I ever traded.
Really?
Yeah, 2004. Well, let's see how they've done since 2004, because it was our analyst at Credit Suisse. It was his top pick at the time, and you can see there, it was I started in April, so it was at €3.58, and now at €54. So I certainly wish I'd listened to him.
Yeah, bit of an iffy time from 2018, I guess, onwards, where it was trading sideways mainly. But overall, obviously doing very well.
And it's had a great last after consolidating around the €48 level. It's had a fantastic last week.
Yeah.
Wonder if there was numbers out there. Yes, there we go. So they had numbers on the 3rd, so just a couple of days ago, and that has helped Inditex break out there. But yeah, Zara, certainly it's always one of the busy ones. I used to live next door to one, and you'd walk outside your front door, and you know, it was just a sea of happy shoppers.
Yeah. Can I just touch on? I want to have a look at Barclays, so I'm just going to share my screen if that's okay.
Oh, absolutely.
So this is my chart for Barclays at the moment. One of the guys on Discord asked about whether this is worth an entry as such, and I just really want to call this out more really about process more than anything. If you look at Barclays, clearly in an uptrend, the moving averages are looking really good. The guy was clearly keen to get in on this, but from a process perspective, you've got to really be asking yourself, is that price too far away from the 20 moving average?
Yeah.
Now, it's quite a distance. Now, one thing I like to discuss when I'm doing my coaching, for instance, is that through pure maths, the price is going to come back to a moving average. So therefore, it might be worth waiting until this actually does a retracement. The other thing as well is to look as far left as you possibly can. So here we've got on the monthly chart.
I remember that.
I think, yeah, we've got lines of support. Actually, it looks like I might have put this in a little bit incorrectly, but on the weekly chart here, we've got this one at the bottom. I know what I did now. The 454 price there is actually a price target that I've had previously.
Okay.
But you can see that it's going away from the moving average at the moment. So perhaps now is not a good time to enter. Show patience. You can actually be making better trades if you actually wait a while until it actually comes through that moving average. And that's one of the strategies that I tend to use quite successfully, is where it touches the 20, or even better, comes from touching the 50 and then passes through. This is really a momentum trade then. And you can also use the moving average as a stop loss. Always a good idea, I think.
I was about to say, so can we pull that in closer to just maybe the last month or so? And
sorry. Yeah.
Guys, can we just put that back up, please? And tell us where you would set a stop loss if you're already in. Let's say you've been in since £3.50. Where would you be thinking to set your stop loss?
Well, I've got this support line here, which is at 390. Now you can see that it's been. If I just change this to an arrow, so you can see here that it had tried to break through the 390 and got rejected on a couple of occasions. Now that has clearly turned into a line of support. It's gone up, it's come down, and it's shot off again. So now we're making higher highs now. So that 390, or perhaps just a few pips below, would actually make an ideal stop loss.
So like an 86.
If you think it's too tight, then perhaps trailing behind the 50, or if you're really aggressive, trailing behind the 20 MAs. Really sort of trying to be patient with the trade and letting it run. This really comes back to your discussion on episode 19 of The Art of Investing, where we're trying to be connoisseurs here.
Absolutely.
Right? We want to let the profits run, but at the same time, we don't want to stifle it. So trying as quickly as possible to get to a trade where it's break even, and then let it run because you're in a no-risk trade. That makes far more sense to be doing that.
It's almost as if you were in the room with us yesterday, because that was Spice's exact kind of conversation as well. Having that ability to take off your initial investment and having a sort of a free go at the move higher, then that's his favoured technique as well.
I think the danger, though, Rich, is that people can babysit the trade. Particularly when you're sort of this side of the screen and you're an amateur like I am still. Basically you can be sitting and watching the charts minute by minute, hour by hour, wishing the price to go up or whatever, and be too eager to raise your stop loss. And you can make it too close, so that if there is some volatility and you get stopped out, you're going to suffer an emotion. And the emotion is probably going to be one of regret. Regret doesn't help anybody. So, the idea, I think, is make sure that you're following your rules more than anything, but do not babysit a trade.
The only difference between an amateur and a professional investor?
Go on.
Professional is using someone else's money. So sometimes I would rather follow the amateur, to be honest.
Right. Yeah.
Right, it is time for Guess the Chart, my friends. What country are we in today? It's a UK stock. I thought we'd have a Spanish one. You'd think he would have given you a little nod there. So, Ole, ready? We are going to guess the chart, UK chart to UK stock, and then come back to us. Join myself and Maturin. We'll go through some of the names that we've mentioned and that we follow, including Graham Dixon stocks. That will come up after the break.
Great.
Wake up, the market's on fire. It's 7:30, turn up the wire. Rich and Angelina driving the show. 5 days a week, and we're ready to go. Piers is hyped on tech in the States. Axel's got his trade of the week on the plate. Chris the analyst crunching it down. And John Myers mining all over town. The charts are gleam, while Monkey Man and Co light up the screen. It's not just trading, it's a family vibe. Jump in the chat, come on, subscribe. We're trading live, we're side by side from 7:30. Come with us, it's the best ride. IG's the place, and the gang's all here. It's a non-stop trading party. Cheers. Maturin guarding Discord's gates. Kate's on the run from Interpol chases. Andrew drops movers and shakers in. Pelican waves pink hands with a grin. Boise's got jokes to lighten the load. Jugger the German numbers explode. Away from the numbers, stats never lie. Scotty makes us laugh, trade, and we're flying high. Producer Phil and Dom on the deck. Cam the man keeps it sharp and checked. Terrence Jarnes directing the scene. Dr. Watson's crazy schemes in between. We're trading live, we're side by side from 7:30. Come with us, it's the best ride. IG's the place, and the gang's all here. It's a non-stop trading party. Cheers. It's more than the charts, more than the trade. It's the friends we've built and the fun we've made. So grab your coffee, let's start the day. IG's here to get it going in the best way. We're trading live, we're side by side from 7:30. Come with us, it's the best ride. IG's the place, and the pictures play. Dude, we're forever every nerd in May. We're trading live, we're side by side from 7:30. Come with us, it's the best ride. IG's the place, and the gang's all here. It's a non-stop trading party. Cheers. All right, Rich. Come on, Angeline. Let's buy low, sell high. And remember that only time will tell.
Wake up, traders, time to start. We're zooming in on lines and art. Candles dancing red and green.
Hey everyone. So Fraser's was the guess the chart, and Pilatus again has got this. Well done, sir or madam. Very well done.
It's tricky knowing with some of the names, isn't it?
It is, I must say.
Well, we didn't get a chance to look at commodities, so shall we do that now? Silver's having a great morning.
And continues to do so. I mean, it's I was discussing silver with Ange yesterday, and again, it's another one. When you look at the charts, it's pulling away from the 20 moving average, and so therefore you've got to be thinking, if you're not in it, when is a good time to get in it? Can be quite difficult, I think.
This takes you back to your connoisseur point. I was in this last Friday. There's we've got a WhatsApp group with a group of the premium clients here, and there's a guy on there that's massive bull of gold, but recently he's become a lot more bullish on silver as well. And he had a really interesting fact about the expiry last week. Remember when COMEX broke down? Basically, there was the problem. So
yeah,
he said, well, that's very convenient because we don't think that there's enough silver to actually deliver today. And that's why the price has been taken up so much from last Friday. And it's stayed there. You know, the move from 53.50 to 58 in the space of 48 hours is just, that's incredible.
Well, I think it sort of begs the question, does it get to a point where it becomes much more attractive than gold, purely because of the industrial uses that you have for silver? And certainly, for a long time, silver was considered to be gold's bitch. You know, wherever gold went, silver was just way behind, and it's proving not necessarily to be the case at the moment. And the same with silver miners as well.
If I was going to take an extract from today's show and put it onto social media, that would be the one. Love it. Copper also. Now, copper is my king. You will see on The Art of Investing, I championed it last week and I am championing it again this week, because it just looks beautiful. And I'm sorry, if BHP are trying again to buy Anglo American, as they came to for the conversation a few weeks ago, they know that they are short of copper. Now, this is, of course, the high grade, right? And you see that's messed up by this tariff rubbish.
Yeah.
But if we go to the LME copper, then we can see a sort of truer picture. Let me see if I can get this. Where are we? There we go. So this is a really, really beautiful. I'm going to take it back as far as I can go here, actually. Now, when I started in mining, it was 2006, and the level of 8,000 was a big level then. But look at this price if you look at the LME contract rather than the HGA. That is a beautiful breakout in the last week.
It's good, isn't it? And I think with these mineral commodities, they're looking so strong at the moment. I think with so much technology calling for the demand of these minerals, is it going to stop going up? Probably not for the foreseeable future.
This is why I like this story so much, because it ticks every single box. If you get Hassett in as the new Fed chair, right, that is going to be an expansionary, accommodative policy. So we are going to generate inflation. He's going to make sure that we generate inflation. And the big, beautiful bill, of course, is going to give industry a lift as well. So exactly as you say, Paul, electric vehicles, data center builds, infrastructure, everything needs copper. And BHP have just told you we're worried about the supply because we want to go out and buy supply rather than build it ourselves because that's going to take such a long time. So for me, it has all the tailwinds at the moment, as well as a weaker dollar.
Yeah. Can I just talk about one of the soft commodities, which I've had an interest in for quite a few months now, which is raw sugar.
Ooh, yes.
Now this has come down and down and down, and I think a lot of this is down to the Western world's thinking, I think, with regards to sugar. But it's so tradable because it's a beautiful chart. If I shall I share my screen?
Yeah, go for it. Chaps,
So
you want to,
if you
get Paul's screen up there, please. Oh dear.
So
That is not sweet.
if you look at that, if you look at taking entries, like I said before, one of the strategies I use is a pass through the 20 MA, and you've got a fantastic opportunity here. It's gone back up, so if you had your stop loss on the 20 MA, you'd have made a really nice little profit, and it's just begging to drop through this again. Now, yesterday, I think it was called out that the sugar prices are likely to go lower because of stronger Indian output. So clearly, I think it's a commodity which is one that is so trending. You can easily make money on this one, I think. And just to bear in mind, this isn't me giving advice here. Please take full responsibility for
Exactly.
your
You lot
actions.
with your technicals, I don't know. Yeah, sugar, it's always been such a tough one. Like, Tate and Lyle has just been such a rubbish performer for as long as I can remember it. And so we tried. It was one of those ones that whenever the sales trader used to shout, right, Rich, what have you got in Tate and Lyle? It was like, oh, I don't even want to get involved because it cost me money every single time. And look at that. It's just been woeful, absolutely woeful for eternity. It's the same price as it was in 2004. So that,
Wow.
I've never traded sugar, the commodity, but, you know, I've never seen an opportunity or a real story that has got me into it. On the technical side, I can see exactly what you're talking about.
Yeah.
Right, currency, talking about things that haven't moved for a while. The GB pound, I mean, she's got away with this budget because we are now at 133.57 on cable. And that's after a strong jobs number yesterday. So, you know, this is really exciting for me to see us do so well post the budget.
It's good, isn't it? Can we have a look at the US dollar yen?
Yeah, please. That's because there's also a big section of the podcast today is on dollar yen because it's becoming a very important topic.
It was discussed on Discord, I think a few days ago. One of our main contributors, Paul Williamson, was talking about the property situation in China. And I asked the question, well, how might you trade this? And he pointed me to the dollar yen as a potential way for doing that. And clearly, it's going the way that he suggested. So I think that China has got a lot to answer for here, I think, with its property market. And it's having this ripple impact, I think, across the world. So it's one to keep an eye on, I think. If
you want to hear an expert at work, then Poppy on the chat, or as you know him, CJ Fellingham. He takes us through what is exactly happening in the Japanese bond market at the moment, and he also walks you through how to be able to tell what the market is pricing in, where the 10-year yield is going to be in 10 years' time, right? So that's a bit of the bond market that, if you've managed to get your head around that when yields go up, bond prices go down, right? That's what's happening in Japan at the moment. You're seeing pressure on bonds. If you manage to get your head around that, this will take you to the next level, because this is starting to talk about the yield curve and how it prices in things across the curve. And it's a really interesting, I learned a lot. I know Spice learned something as well. But that will be on the Art of Investing this afternoon around 4 o'clock.
Yeah.
Maturin, I do fear our time is coming towards an end. Go on, I know you've got one more thing for me.
Well, I quite like the look of Marriott International at the moment.
Let's get that up.
It's sort of hit a level of support, of resistance yesterday. And has bounced off it, and it looks as though, momentum being what it is, and with it now touching a 20 moving average, or it's certainly bounced off it, if it can break above that previous high of 307, then I think it's one that can go really well. There was some news out over the past couple of days. Its revenue now has hit nearly 6.5 billion, which is exceeding expectations as such. And it's also looking at partners to grow its Dubai residences. So I think it's aiming itself more at the luxury end, particularly in places like Dubai and in the Middle East. Personally, I've stopped in Marriott hotels quite often. I've always found them to be, quite a good quality. So one, I think that I'm considering for my SIP, for my long-term investment, if it actually breaks above the 307 mark.
Nice. That's definitely one to watch then, because that 307 is clearly a big level, as you say.
Yeah.
Good stuff. Right, on the chat then, we've got a couple of people thanking you, of course. IR3004 saying thanks for discussing Barclays after it was mentioned on the Discord. We've got Rags up in Glasgow saying, I need gold to drop a little for his prop firm test day 2. So good luck with that one, because I know how tough those are. And No Name, you're exactly right. Tate did sell most of their sugar business because it had that refinery next to London City Airport, didn't it? Good. Maturin, thank you very much.
You're welcome.
It's been wonderful.
You're welcome.
And you going to come back and join us again?
I think so, if you'll have me.
Absolutely. Now, coming up next, we're going to try something a little bit different. We're going to give Bill Blaine the floor to himself to bring you the morning porridge. Have a great weekend, everybody, and we'll see you bright and early on Monday. Best of luck for the inflation numbers this afternoon, and I'll hand you across to my fellow and better-looking Scotsman, Mr. Bill Blaine.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Well, good morning. I mean, this is extraordinary. I've been handed the whole studio to myself. As you can see, I'm not in the studio. I'm in my second studio at home because I can't get my computer to work in my office. This is where I normally come to relax. Well, not today. Anyway, it is going to be a fascinating market into the last few weeks of the year. Now, as always at this time of year, everyone is coming up with predictions. And if there's one set of predictions that I really like to read, it's something from Saxo Bank. And you can find it on the internet, which is Saxo's outrageous predictions for 2026. And what they actually look at are a whole bunch of things that are unlikely to happen, but if they do, will have a major market impact. And I'm not going to talk about any of them in great depth, but there are three that particularly took my attention. And one of these was SpaceX. Now, there's an awful lot of people talking about SpaceX being the first $1 trillion IPO. And that's based on, is sometime next year, Elon Musk managing to get the Starship into proper orbit and being able to start planning his trip to the moon and then to Mars. And the event that Saxo Bank are thinking about is that in 2029, when all the planets are lined up favorably, Elon Musk will be one of the crew on the first ever mission to Mars, and it will be in a starship built by SpaceX, and off he'll go. And at some stage after that, he'll establish his fiefdom on Mars, paying no tax and being president for life. Yeah, would be great. And they say that that will definitely happen, that it will IPO if we start to see starships being able to run the moon mission that NASA had planned for next year. Now, I had a little think about this and I thought that is a zero chance of happening. And I don't think that SpaceX ever is going to IPO at that kind of price. And here's the reason why. Doing some digging on the Starship, which SpaceX is placing all its eggs into, it is underpowered. It is not getting into proper Earth orbit with a proper cargo. Now, the last successful test they did, they managed to send it off ballistically, so it landed in the Indian Ocean. It exploded immediately afterwards, but that was a planned explosion. But it hasn't actually orbited the Earth. To do so, it will need to refuel itself while it is still ascending into space. And no one's ever done that before. And then it will need to refuel itself not once or twice, but up to 10 times before it goes to the moon. And it will need to slow down to land on the moon and then take off again, meaning that it will need yet more fuel. And it worked out, doing some research, and yes, I used Grok, Elon Musk's very own AI, to do some of this, to send a single mission, a single Starship to Mars will cost around $30 billion.
just in the number of starships acting as tankers that you would need to accompany it if they cannot make fuel on Mars, which is yet unclear. So if I was to look at any of Saxo Bank's outrageous predictions for next year, I think the least likely is that SpaceX IPOs at $1 trillion. But where does the rest of the market go after that? Well, reading through some of the stuff that the US banks are putting out, they are all suggesting something like 10 to 20% upside in the US stock market next year. And they're doing that based on earnings continuing to rise and that we continue to see the kind of investments that the big, magnificent 7 or 8 or however many they are now, US tech firms will continue to make. Now, these firms are profitable. They are all making marvelous amounts of money, but we are seeing changes going on. Now, one of the big things that has changed in the last 20 years is that all the advertising revenue that used to go to TV and a little bit to films, most of it, over 80%, now goes to people like Facebook and Google who are running advertising. And they're all extremely profitable off the back of it. But then many of the other things they've been doing simply have not worked. And the obvious one there is the metaverse. We'll all remember how Facebook's Mark Zuckerberg changed the name of Facebook to Meta to reflect his belief. And of course, the biggest move we've seen in markets this week was Meta jumping after Zuckerberg confirmed that he's going to cut funding to his Meta unit. In other words, one of these big drives that we expected was going to change the world completely as we all live and play and work in the metaverse has simply not happened. And I think that begs the question, what is AI really going to turn into? But there are a couple of different things happening in AI, two of which I think we need to be really aware of for next year. The first is the circularity of finance argument, and I've harped on about this a number of times in the morning porridge segment of IG. The thing there is that if we are relying on companies like OpenAI and Anthropomorphic, who currently make absolutely zero profit, to be paying billions of interest and principal back on borrowing to buy NVIDIA chips, then who's actually going to end up paying for it? And the one to watch there is Oracle. Now, the thing about Oracle is that it is the most heavily indebted company in the USA. And that is reflected now in increasing doubts about its creditworthiness. And you can see that if you call up this credit derivative swaps, the credit default swap price on Oracle. It's nearly doubled in the last couple of weeks, reflecting an increasing worry from investors who are hedging themselves against Oracle defaulting. Now, that is really interesting, and it spells trouble for who's actually going to end up paying this massive compute power that is going to go into all these new data centers. And then, of course, on top of that, you have the secondary effects of data centers on the price of energy and the price of water. The other big issue that concerns me with AI, and again, it's something I've gone on about many times in this segment, is the closed weight, high compute, large language model that all the American tech firms have gone for their AI offerings. Is that really the way forward? Now, there's a very good chum of mine called Michael Power. He lives in South Africa, but we had him over here meeting investors last week. And for many months now, he's been pointing out what he calls the tiger paradox. And this is a story from the Second World War, where a German general commented that the Tiger tank was the best tank in the world and was worth 4 Shermans every time. The problem was the Americans always turned up with 5. Now, I think that sums up what's going on in the AI market. The Americans have built the best tank in the world, but the Chinese are building something that is cheaper and much simpler to run. They are building open weight. That means you can put your own data and use it as you see fit. Smaller language model AI systems in place. And we first became aware what the possibilities of that were going to be last year when we saw DeepSeek launched, nearly as good and costs a fraction of what the big American models are. Now, you then put that alongside how China is rapidly gaining leadership over the whole gamut of technological sectors, not just in AI. And this leads to a very interesting question. What happens if we get to a situation where America no longer leads in tech? Now, since the beginning of the last decade, we've just assumed that all American tech is better than anything else. And that's pretty much been true. Our Apple phones, our iPhones are a hell of a lot better than anything else. And we've all used Microsoft for every single program we use. But what if the future, which will be AI based, we start to use stuff from elsewhere, from non-American firms? What happens to their quality of earnings? How much will they pull in? So bear in mind that at the moment there are 1 billion wealthy European and North American consumers, but they are no longer core of the global economy's consumption. That is now shifting into Southeast Asia, where we have at least 3.6 billion people who in the next couple of years are going to effectively be as wealthy as the rich developed West. And that is the consumer base that everyone's going to be tapping. And these people are not necessarily going to be live for products like Apple and Google. So there's an awful lot to worry about for next year. Now, I do understand there's a couple of questions coming in. Unfortunately, I can't see them on my screen. So I may have to ask the invisible Phil to jump in. So we've got Andrew asking, is there any sign of a backlash against AI? Well, all you need to do is read about Michael Burry. He was the guy who was the star of The Big Short. He published an excellent piece which questioned the accounting principles and the whole investments. Now, an awful lot of people thought that because Burry effectively closed the fund he was running, that he was running into problems because he was shorting these big tech AI stocks. But in fact, all he was doing was removing any duty that he has to care for other investors by focusing it almost like his own family office. A very smart move to make. Was there any other questions, Phil? He said, asking the producer. Okay, other things that are going on in the world next year, there is so much to talk about. It would include what's going to happen in Ukraine and what the consequences will be on the current relationship between North America and Europe. Now, everyone assumes that Donald Trump is making some kind of massive mistake here by dividing the US and Europe at a time when the US is going to need trading support. But never underestimate Trump. He's not daft, he's not stupid, he's cunning. And he understands what's going on with China becoming more and more dominant as global manufacturing and now a competitor for the US in tech sectors. And he wants to make sure that the US markets are protected. And if that means America first and an American hegemony over the American hemisphere, then so be it. Anyway, lots more to talk about, and I'm sure next week we'll be back to the normal thing, which is Angeline and Rich interviewing me and asking me questions. Thank you all very much for your time. I think the rest of the crew will see you all Monday.